ZANK. Just going to talk about a loan case study today. This is for residential construction loan. Some of the challenges that you might face for a residential construction loan through a bank would be, most of the time, a lender will require you to have pre-sales in place if you're building to sell, or if you're building to retain, the lender will require you to have full servicing in place, generally signed lease agreements in place, and all the information required prior to they will start funding the construction. And most of the time, a lender will have a restricted LVR on the ability to be able to borrow, reducing your ability to borrow through from a bank. With ZANK, some of the different options that we're available to offer through us would be, when we start the funding, we don't require any pre-sales if you're building to sell. You can organise your pre-sales during the construction phase. If you're building to retain, we don't necessarily require full lease agreements in place for investment properties. We will allow to do a lease appraisal and be able to lend against lease appraisal, especially if you're building, I guess, a little bit more outside the box security, such as things like student accommodation, kindergartens, hotel motels, anything that's outside the box a little bit. We're better off in lending in that area. One of the case studies I'd like to show you, one of the loans we will recently be able to do, was for some student accommodation. We had a client that wanted to build a student accommodation property. It's a bit smaller than the standard size number of rooms that most student accommodation buildings were having. The client wanted to manage this property themselves. Through a traditional bank, they would have required the client to have a student accommodation manager in there and require the property to be a lot larger property. With ZANK, we were able to fund the property as is, the client managing the property themselves, and going very well with their return of investment.